surprisingly robust national accounts with a gross domestic product, or GDP number, that says the value of the goods and services we create is growing far faster than the experts expected. Productivity grew 0.3% in the quarter, when it had been flat and spent a lot of 2024 going backwards. Normally, rising wages prompt employers to spend more on technology. But while wages lifted, public investment slumped and private investment was just above zero. Maybe the June announcement of the government's reform roundtable made people work a bit smarter. After their holiday, US stock indices all went backwards, and crude oil slid after US sanctions on some shipping companies linked to Iran. Our dollar flatlined with the GDP figure, so seemingly little concerned about its potential impact on interest rate cuts. The hit was on the market, down substantially, and largely due to turmoil in the bond market, where governments go to fund debt. But to keep things in perspective, since President Trump announced he'd put tariffs on the entire world in April, our market is up almost 20% in value. And to the garage. Australians bought more than 100,000 new cars in August, and for the first time, 4 Chinese brands in the top 10. If the roads feel skinnier, it's all the utes and SUVs. Of the top 10 cars we buy, they're 9. But Tesla sales in Australia have been torched. The fall's even more substantial in Europe. And that's finance.